Thank you very much, Professor Lobo, and good morning, everybody. It's for me a great pleasure to be in Portugal. It's my first visit to your beautiful country. I do see that New Zealand, where I'm from, and Portugal have much in common. Beautiful scenery, we have agriculture, we have tourism. One of the other things we both have is we both put forward for the position of Secretary General of the United Nations, we each put forward a very good candidate. Unfortunately, the New Zealand candidate was not successful, so congratulations to Portugal for that. The New Zealand candidate was a former Prime Minister of New Zealand called Helen Clark, and I'd like to pick up on a comment that Professor Lobo made in his presentation when he was referring to the forests and my sympathy in relation to the fires. But Helen Clark is a person who her favourite recreational activity is walking in the forests, and she became Prime Minister in the early 1990s after we'd done the reforms in New Zealand. And one of the things that we took a lot of pride in during the reforms was getting a complete balance sheet with all of the government's assets on it, including the national parks where the Prime Minister would often walk. And it wasn't until she had been in office for some couple of years when suddenly somebody in the Treasury realised there was one significant asset that we'd left off the balance sheet. And that was the tracks and the accommodation in the national parks. Now, that might not sound like much, but in a country where tourism and walking those tracks is very important, we realised that we needed to account properly for these tracks and huts. So we started to account properly for them. We would capitalise the development of the huts, and we would treat the expenses of maintenance as expenses. Now, the point of my story is that what that prompted was a considerable reallocation of resources. Once we knew and accounted properly for the huts and tracks, we made different decisions about which tracks we wanted to maintain, which tracks we wanted to close, how we wanted to invest in the accommodation on the tracks. So the point that Professor Lobo was making about good accrual information leading to much more rational management decisions is exactly what we found in that particular example. I should perhaps also start by just explaining that I start most of my presentations with a PowerPoint slide that has the consequences on it of poor public financial management. That's a photograph from the riots in Greece associated with their financial crisis. Mostly, I think people consider public financial management a relatively boring subject, although I'm extraordinarily impressed with the number of people who are here this morning. However, if public financial management is done badly, what we see is what you see in that photograph. I've only got a relatively short time this morning, so what I would like to do is just give you a very quick overview of the nature of our public financial management system, talk a little bit about where we were before we did the reforms, a couple of key concepts in the reforms, and where we are now. And I think that will take up all of my 10-15 minutes. So what we have on this slide is, if you like, a fairly abstract model of what underpins the New Zealand public financial management system. I think the first point to observe is that the bubble at the top, decision making, is absolutely the essence of why we made the reforms in New Zealand. It was an intent to improve the quality of decision making, both for the government as a whole in terms of its fiscal performance and position, but also the quality of information and decision making at a departmental or sub-organisational level. And what is important about this diagram is that it is a system. We regard it as a system of public financial management where those different stages in the process need to be entirely consistent. And I will come to why we did it, but the system that we have in place is consistent in the sense that accrual information, accrual numbers, are what provides the information in each stage of that process. So to use the first of the points as an example, fiscal objectives. New Zealand has in its Public Finance Act 5 principles of responsible fiscal management that the government is required to adhere to. Those 5 principles are all accrual numbers. They are the revenue, measured in accrual terms, the expenses, measured in accrual terms, the operating balance, the result for a year, measured in accrual terms, the net worth, the total assets less liabilities of the government, measured in accrual terms, and the debt, also measured as you would measure it in accrual accounting. So all of those 5 objectives are all specified as accrual numbers. Our fiscal objectives are not specified as cash flows, debt is included, but essentially they're accrual numbers. And then that follows on round. The budget is an accrual-based budget for the government as a whole and for the departments. Their budget is measured in accrual terms. And so on the appropriations, when Parliament approves appropriations, they reflect the same accrual numbers that are contained in the budget. They also reflect the nature of the transaction. If a government department is spending money on delivering services, that is a different transaction to if the government is spending money on increasing the size of its balance sheet through capital expenditure. So, the first point I wanted to emphasise is this point about the whole system is driven by the same set of numbers. So we do not have a situation as 50% of OECD countries now have where we budget on a cash basis and we report on an accrual basis. For us, that would make no managerial sense whatsoever. You would be monitoring your budget through the year in cash terms, and at the end of the year you'd report in accrual terms. That would be, from our perspective, that would be nonsense. Then finally, of course, the departments and the government as a whole both produce external financial statements, just a full set of financial statements according to international public sector accounting standards, and those statements are audited at both the departmental level and the government level. I'll come back to it, but perhaps at this point it's worth just emphasising also that I'll move on to the next slide to make this next point. The actual system that New Zealand uses, when you turn that abstract diagram into what are the actual documents that are produced as part of the process in New Zealand, you'll see that, first of all, you've got the external circle, which is the financial management or financial activities of the government as a whole, and the internal circle are the activities of individual departments. And you can see that in developing the budget, those two systems come together. Again, just to make the point, as in the previous slide, all of these stages, the financial aspects are reflected in accrual numbers. It's perhaps one way of emphasising how this differs from what you normally see in sovereign governments is this point here. Monthly financial statements. The New Zealand government produces full accrual-based, IPSAS-based financial statements every month. It produces those statements and makes them public within a month, give or take a couple of days, of the end of the month. So what that means is that the government or managers within the government are never more than 6 weeks away from seeing the fiscal consequences of their decision making. And that gives the whole system an immediacy and a set of incentives that don't exist if you are only reporting your financial statements some months, or in some cases years, after the end of the financial period. In other words, those monthly accounts can be produced because everybody in departments and in the government as a whole is using the information to manage their activities. This is not information that is produced because it's good accounting. It's information that's produced because managers, whether the Treasury in relation to the government as a whole, or managers in departments in relation to their own activities, they're using that information to see where they are this month relative to their annual budgets, and then they're able to make adjustments as necessary. That's an extremely high-level description of the New Zealand model. The essential point about it, just to reiterate, is that it is a system. The whole system is driven off the same set of numbers. I'd like to spend a minute or two talking about where we were before reform. The United Kingdom has recently voted to come out of the European community. It was a very salutary period in New Zealand when they voted to go in, because the United Kingdom was a major market for New Zealand products. And when they entered the European Union, we lost a lot of market. And for about 15 years, the government tried to insulate the population from that, and we became an increasingly highly regulated economy as the government sought to prevent citizens from having lower standards of living. We were, at the time, New Zealand was referred to as the Albania of the South Pacific. We were such a heavily regulated economy. We had slow growth, we had increasing unemployment, we had had 2 decades of deficits every year, and our debt to GDP had got as high as 56%, and everybody will understand that that's not sustainable. I have to say 56% looks pretty good internationally now. At the time, we regarded it as irresponsible and something that couldn't continue. And just for those who really are interested in public financial management, our financial management system in 1989, the system that we reformed, had the following characteristics. We had cash-based budgeting and accounting. We had what I think we regarded as quite a good Treasury-run accounting system. It was highly centralised. The Treasury made all the payments for the government. We had program budgeting. We had fund accounting. We had an input focus in our decision making. We were very concerned about head counts and levels of cash expenditure. And managers within government really had very little discretion. They had to abide by a set of rules that was contained in a book that was about this thick, and it had such important things in it. Wellington, like Lisbon, is quite a hilly city, and the instructions from the centre told public servants how to park their cars on a hill. I kid you not. They were seriously instructions telling you how to park a car on a hill. So there was very little managerial discretion. You couldn't make your own decision about how to park your car. That was already done for you. So that was how the system operated. Then in 1984, well, this is before the reforms, but in 1984 we had an election, and the government that was elected was a left-wing government, and they were elected on a standard Labor Party type of policy. Within a couple of months of taking office, the key group of ministers made a really very fundamental conclusion, and that was that the way the New Zealand economy was not operating well for the people of New Zealand. They needed to make some very radical changes to it, and they set about doing that, and they reformed, pretty much everything in the economic framework. They completely reformed the tax system, they reformed the system of import licensing which we had, they set up an independent central bank. And there was a whole set of sectoral reforms as well. So they made this radical set of reforms, and as part of that, they started in the public sector with the state-owned enterprise reform. And one of the things ministers saw when they did that was that the Railways Department, which had previously employed 24,000 people, when it was set up as a state-owned enterprise, run on business lines, it reduced its employment, carrying the same number of passengers and the same amount of freight. They reduced their employment from 24,000 to 6,000. And the view of ministers was, well, if that's the level of inefficiency in the trading activities of government, what is it like in the rest of government? And so they came to the view that they needed to do a very radical reform of the way the public financial management system operated. And like the previous speakers, this wasn't my sole responsibility, but my responsibility was to design the financial management system. And we were essentially given a blank sheet of paper, and the minister said, design something that will make the government perform better. And so a key element of what we did was to try and define a system that would have the reform objective of improving the performance of the government. It was not about, I just really must emphasise this, it was not about improving the quality of the accounting. It was about improving the performance of the government. The Deputy Prime Minister at the time made the comment that we had waited a long time to get our hands on the levers of power. He said, and we were very disappointed to find that those levers were not connected to anything. In other words, the ministers wanted to be able to pull a lever and see something happen, and they felt that when they pulled the lever, just nothing happened. It was as if there was nothing operating. So one of the things we was trying to do was to develop a system that would encourage much better performance. I'd like to give you one example of what this meant as a way of explaining why we introduced accrual accounting. If I asked you, how would you measure the performance of the Toyota Motor Company? How would you answer? And I'd appreciate the answers in English if you don't mind. Would somebody like to venture? How would you answer that question? Profit? Return on capital? Something like that. And that's fine. That's how you would measure it. If you were the owner or owned shares in the Toyota Motor Company. But what if you were Vincent looking to buy a new car that had adequate headroom? As a customer of Toyota, how would you define performance? It's quite different. It's something about, is the product suitable for its purpose? Did they deliver what they promised? Is it the vehicle that I contracted to buy? That's a very different concept of performance. So now the harder question is, which of those two concepts of performance is appropriate to the public sector? Anybody like to volunteer an answer? Well, we concluded that both were. That a government department could produce its services by running down its capital. And that's not a good idea. And you want to know if the department's undertaken to produce certain services, you want to know what they cost. That's what the full cost of them is. And you want to know at the end of the year, did the department have the same capital, including financial capital, as it had at the beginning of the year? Because you don't want it to be running down its capital because it's got to produce services. So we said we need to know whether or not the department and its chief executive are performing in terms of both those dimensions of performance. Well, here's the thing. You can't know anything about either of those views of performance unless you have accrual accounting. So we introduced accrual accounting because it was the only way we could measure the performance of a department in terms of what the owner's interested in, the capital, or what the customer's interested in, the services and what they cost. So the accrual information in the New Zealand system was not there because it was good accounting or it was IPSAS, because IPSAS didn't exist then, or anything like that. It was because we needed that information to measure performance. So that's why we did it. I don't have time to go through the detail of how the system operates or what the nature of the appropriations are or any of that stuff. But let's now turn and look briefly at where we are now. Well, so that's just a collection of some of the key documents that the government now produces as part of this system. I'm not going to go into these in any detail, but you can see there's right at the top, there's Hei Turahanga Mokopuna, which is the Maori for the long-term financial plan of the government. Then you have a budget policy statement. One of the things that was done was that the government has to produce its budget strategy in December ahead of the budget in May. So the budget is a much less political event than it used to be. The important decisions are made well in advance of the budget. The financial year starts on the 1st of July. Associated with the budget is a fiscal strategy report, other documents. I won't go into those. So this system now is fully embedded. There is nobody in the New Zealand government would contemplate for a moment the idea of running the government on a cash basis. It would be considered to be completely impossible. How would you do it? Somebody recounted to me recently being asked by a visitor, why don't you use cash accounting? And he said, I had no idea how to answer that question because I'd never thought about it. I had never conceived that a government could operate just on cash information. But that's not really, perhaps in some ways, the important point. If you ask me how's it going in New Zealand now, well, I think this tells you the answer a little bit better. This is the net worth of the New Zealand government and what has happened to it in the period since the system was introduced in 1994. At the time it was introduced, we had liabilities greater than our assets. And you can see that that difference, the net worth of the government, progressively improved through until 2008. And in fact, we got to a point, you remember I said we had 56% debt? At the highest point there, we had 56% net worth to GDP. So the government had built up really quite a strong balance sheet, which was a very good thing because then we had the global financial crisis and we had two major earthquakes in Christchurch, which the earthquakes had a cost estimated to be something over 30% of GDP. So that was a bit of a shock and the government's net worth declined for 3 years or so, and then because it was a tightly managed financial system, we started to accumulate net worth again after only 4 years. So it's also a very resilient system. And if you look at it comparatively and just compare as best you can the New Zealand results with what you see in other countries, you'll see that that position of 38%, which we now have net worth to GDP, is pretty good. Australia has -19. We do compete a lot with Australia, and it's that we like that we're better than Australia. Canada has -31, France -130, Israel -158, the United States minus 101, the UK minus 102, Switzerland minus 6, and New Zealand plus 38. So we think that if you look across jurisdictions, this financial management system seems to be working pretty well. Some analysis, in fact, that Paul's firm has done, looking at how that translates into relative performance. This is a comparison of New Zealand and the UK and France, again reinforces that notion that New Zealand's performance in financial management terms has been extremely strong over the last 10 years. In fact, you would find, I believe, the same number if you went back further than 10 years, but you don't have the comparators because the UK and France weren't producing accrual-based information at that time. So one final comparison, because the UK was referred to a moment ago, but I would make a strong distinction, or in the last presentation, I'd make a strong distinction between what the UK has done and what New Zealand has done, and it's just this. The UK does not consider its fiscal position in accrual terms. They judge their fiscal position in terms of cash and debt. That's what, when they talk about their fiscal position, they mean the cash flow forecasts going forward. They don't mean the state of their balance sheet. And I think it's just interesting to compare what's happened in the last 4 years in the two countries. You can see at the bottom here, the New Zealand government's net worth to GDP has gone from 27.6% up to 35.5%. So post the crisis and the earthquakes, the net worth to GDP is again increasing. The UK government doesn't give you that same percentage, can't figure out why, but you'll see here that their net liabilities, that is their negative net worth, has gone from around £1.1 trillion to £2.1 trillion. So their net worth has deteriorated in the last 4 years by approximately £1 trillion, which, if you relate it to their GDP, is 49% of GDP. So their net worth has deteriorated by 49% of GDP in 4 years. Now, seems to me that's an important commentary on the fiscal management in the UK. And I'm not picking on the UK in this sense. The UK is globally, you could argue, one of the leaders. But what they don't do is they don't run the whole thing as a system. Their fiscal objectives are not accrual objectives. So just to finish, so you might wonder then, well, what's been the cost to New Zealand society of these reforms? This is even, if you like to use the term austere, the New Zealand government's been way more austere than the British government. Instead of pumping money into the economy, the New Zealand government's been building up its own net worth. So what's the effect of it? Well, I could explain in a lot of ways, but probably the Legatum Institute's assessment of prosperity, which is not just defined in terms of economics, but is defined in terms of things like education, safety and security, and so on, ranks New Zealand as #1 globally. So I think you can conclude that a relatively demanding fiscal regime and a resilient government balance sheet don't harm the state of the society. On the contrary, I believe they do a lot to strengthen it. Thanks very much.